What is an IRS Notice of Deficiency, 90-day letter? Imagine getting a letter from the IRS that could change your financial plans. That's what a Notice of Deficiency, also called a 90-day letter, is all about. It's a formal letter that the IRS sends when it believes you owe more money in taxes than you reported. This notice is an official statement that the IRS has found a difference between what you filed and what they think you owe. The process starts when the IRS reviews your tax return and spots issues like unreported income or incorrect deductions. Before sending the notice, they usually send a preliminary letter called a 30-day letter. This explains the proposed changes and gives you 30 days to respond or appeal. If you don't reply or disagree after those 30 days, the IRS then sends the 90-day letter. This letter details how much extra tax the IRS says you owe, how they calculated it, and what steps you can take. You have 90 days from the date of this notice to respond. During this time, you can file a petition with the United States Tax Court to challenge the IRS's claim. You don't have to pay the disputed amount right away if you decide to challenge it in court. If you do not respond within the 90 days, the IRS will assess the tax and start collection actions. This means they can send notices for payment, garnish wages, or even seize property. That's why it's very important to respond on time if you believe the notice is wrong or need help understanding it. For Asian American taxpayers, knowing about this notice is key because it marks a critical point in resolving tax issues. Responding correctly and promptly can help avoid penalties or more aggressive collection efforts. If you're unsure how to handle the notice, it's a good idea to get help from a tax professional. They can explain the details, gather necessary documents, and even representing you in the tax court if needed. In simple terms, the IRS Notice of Deficiency is a formal letter saying you owe more taxes than you reported. You have 90 days to contest it in court before the IRS can take further collection steps. It's an important part of how the US tax system handles disagreements and ensures taxpayers have a chance to respond.